We did it yesterday. We're doing it again today. There's a lot of talk out there. Watch us here with 1,000 takeaways for you as we walk the walk in a live environment with real students of ours. Enjoy. Let's get into it. Share my screen here. So you guys will kind of be, looking over my shoulder here. I'll start walking through my prep. I've pretty much adjusted my levels. In fact, we kind of had something of a trade pre-market, but we'll focus on going forward. This isn't necessarily all about you guys just sitting there and monitoring what I do and whatnot. I think that will be a big component of it. Like, one of the biggest reasons we're doing this is so that you guys do get more of that inside baseball. You do get a little more in my head and see what I think at the hard right edge and stuff like that. But at the same time, I'm fully open to you guys sharing things, asking things, stuff like that, so that we can get questions or uncertainties or double check what you see at the hard right edge and things like that too. So kind of a dual purpose. All right. So, I haven't posted my preps for the room yet. So that'll be something that I kind of walk through with you here. And then you'll have to give me a second to make those posts and stuff like that. So again, does anyone have any questions about the prep or
I,
have
I
anything
had a
different?
quick question for you.
Yeah.
I think that might have been Nika trying to come through. Happy to put myself on mute here. So hop in. So when I was doing my prep, I always find that I've got, not always, but I'm close to your levels. And so when I was looking at this, based off of your comments around the monthly, I was actually looking at my area of interest slightly inside of the CVA. And I noticed that you're
Based
above,
on what?
based off of, oh gosh, now I've lost my levels. The prior value of the weekly, the larger composite value area high, and then looking at the acceptance picture, really just kind of developing on the monthly. So that it's kind of like, okay, that's an interesting area, but maybe for later in the day. And so at this juncture, I'm more interested in maybe my band being lower. So I may have passed on that initial, let's call it attempt. I guess we'll call it a failed imbalance pullback. And then it's just obviously taken off at this point. Would that have been wrong?
So what you're saying is, Merritt, I'm a little more keyed in on like 78, like 42.78,
Sub 80, yeah, sub 80,
rather
yeah, kind of in
than
that
like,
area.
what is the monthly? 42.90s. I agree
Yeah.
with you. I am too.
Okay.
I am too. I just wanted to create that bit of a zone just to give some flexibility to the level and understand that maybe if we break higher, the pullback might stop at 90s instead of 70s.
Okay.
And just merge all that. That's really what I wanted to do with that. But no, I agree. I'm much more locked in on weekly prior value and the CVA, which are quite close to each other, 78 and 84, whatever it is. Areas, not lines. Areas, not lines.
Looks like we're gonna have a replay of yesterday.
How so?
Pull down into the level, buyers step in, and then you get a retrace. We have an opportunity to step on board.
Yeah, we could. Absolutely. I will say this. Given what the monthly looks like today, I am less certain. I have less conviction. To me, the monthly does present a little bit of general wide area dissonance, because in reality, while we did draw the level around, if I bring over the monthly, it's developing value high. We could easily reject anywhere from developing value high all the way up to the 1.5 or whatever, and continue like I'm pretty sure I was talking about specifically earlier, maybe not, but the monthly, and yeah, I drew it like big like this. I was like, the monthly's been doing this, remember? So this is what I'm talking about. And the monthly's now here, which is at the upper end of its rotation. But like I mentioned, compression, VWAP rejections. So it is rotational to slash slow trend, slightly bullish, right? So that's a factor that has me, as opposed to yesterday, where there wasn't a factor that said, hey, this is not a good idea, maybe. Today does have that. You do have to be aware, not as like a key main variable, but higher time frame rhythm and whatnot can keep you out of trouble at times, or at least keep you weary where you should be weary. And if you're weary, how's that going to help you, right? Well, that means maybe you don't take 5 attempts at the same area from a chop zone intraday, right? All right, obviously an initial down move here, which quite frankly looks like, to me so far, not much strength behind that from the sellers. I mean, to rotate down from 43.11 down to 42, almost 91, about 20 cents there, and delta is minus 14 at the moment. That's they've sellers not put in a whole lot of work there, so we will continue to monitor that. Again, I've got prior value highlighted here. Today's a good day to just go hide that, right? Because prior value is not so good. Well, dang, Nika, I wish I was at a Hard Rock. Little craps, little blackjack. I have quarterly +2 set to 48K. Wow, Lake Tahoe and trading. That sounds like a winning combination. Yes, essentially, Nika, what you're saying about the quarterly +2 and whatnot, it's, as I understand it, confluent kind of with the almost a 1.5 on the month. So that rhythm that I was talking about on the month from VWAP to +1 to 1.5 is exactly what you're talking about on the quarterly from its DVA to +2. So we're talking about the same thing. You're just looking at it on a different chart. Can you show us how to get the hashtag highlighted? Is that the number highlighted in your CD? Never mind, you figured it out. Okay. So all right, stop using the chat except for Nika because you got some audio stuff there. But please talk to me so I don't have to monitor the chat as one additional thing.
Okay, I didn't figure it out. I put
What do you want highlighted? Like the number?
The current value, yeah. I tried current price line and it's just a line. It's not working.
Let's see. I'm pretty sure it's just last, right? So the close, and then you set the value to the value label, right?
Close visible. I have that.
No. Does it say value on
Doesn't say
over?
value. I'll do that.
Okay, so
Thank you.
you go right here.
Line label, value label. Got it. Right side value centered. It's alive. Okay, we're good.
Cool.
Okay.
And what's really cool about this, by the way, while we're not necessarily stalking in a trade, I do need to start my S&P prep. Name label is cool too. You can get it to just use the default name, or if you input a short name, it will default to that.
Oh. Okay.
All right. So, okay, this is good. Pushing a lower extreme of a rotational ETH into the actual upper edge of the value or balance from yesterday into the CVA, right? Now we're talking. Again, the problem is that I do see this as dissonance on the monthly. I do. I know if you look at the prep chart here, it looks like, oh, well, acceptance is above and whatnot, but I am factoring in almost like a monthly rhythm. So that's important to note here. However, sellers extremely weak, extremely.
Maybe a question here, given kind of how flat the overnight VWAP is, if you saw a stop run off the low, would you consider taking a long because rhythm hadn't been established, or to fade in extreme?
Absolutely, but I'm going to need. It's not going to be based on the tempo of this move, right? It's picking up in speed.
Yes, it is now. Absolutely.
Even though there's no delta behind it so far, I don't know what's going on, right? There could be just a really, really powerful sell program that's just passively kind of putting size in, and the market's reacting to it and moving away from it. I'm not sure. And I don't really care. I do care whether or not the general market is really pressing hard. And now we're starting to see some selling hit this tape.
Mm-hmm.
So to me, this trade is absolutely off the table right now. If it does start to shift momentum and look higher, I'm not interested in buying this. So this is where either I'm going to get one of the following. It's either going to, we'll just look at the prep chart up here. Well, I'm going to run out of space there. It's either going to pop back up pretty nicely and the buyers are going to be behind it or something like that. And then I'm going to get a weak move to look to fade. Or we're going to see more of a move in continued selling or downward movement. We'll see what the selling is like. And then a very weak retrace to give me essentially like hypo B, right? Like something like this, right? So back into the CVA. So we're gonna see what happens. So yesterday was importantly a day one break as we get to kind of structural here. And so obviously it's very, very important. Not only in this case is the CVA important, but we almost put as many TPO periods in at this upper ledge yesterday as, in fact, it might be more than the CVA itself. That might be the widest ledge I've ever seen in my life. there's only 3 periods that didn't touch and reject the same 3-tick range and reject the whole day. That's nuts. Anyways, so we're going to keep an eye on that ledge as well. If we get something really nice, and let me just check back in with crude real quick. Okay, so we did see the continued selling. I mean, we're halfway through the CVA at this point. We are back underneath the weekly attempt at the breakout. So you see that monthly rhythm, that monthly being at that upper extreme, I think was an important thing for me to keep mentioning, and not just being buying any Heikinashi shift or anything like that, that we could see. So back to the
Just real
ES.
quick on CL, was that not a fast trend opportunity, even though the speed of tape's picking up? I mean, you're riding DVA low, you've got a little bit of a rhythm established off the +2, off of the ETH.
I mean, I would say that if things were really, really slamming and the tape was really supportive of this sell-off.
That's why I haven't touched it, but I figured I just
Same.
wanted to get some clarity.
To me, this tape has me more leery, and and in fact, here's I'm not typically looking to go with fast trend moves, even if they happen, and maybe even if order flow supports it, on mean reversion type moves, right?
Can you be clearer there? What do you mean by that?
Well, this is a reversion back through yesterday's range and balance. It's a reversion back through the CVA. It's a reversion back through
Oh, okay. Yeah.
last
I didn't
month's
think of that. That makes a
profile.
lot of sense.
What
Wow.
is
Okay.
this market doing? It's reverting. It's failing to break and sustain.
And then that's when you get all the noise. Okay. This makes sense. Thank you.
You got it. Okay. So where does that leave us with our collective S&P view here? This was yesterday, I'm pretty sure, the monthly +2. So I'm going to keep that there. I do want to kind of give some upside area. And I think if we did push the monthly +2, that would be a pretty nice extreme for today. So I'm going to keep that up there. That's what that is. Obviously, composite value high here. And if I recall, the prior day's ledge was a little bit higher, right? Maybe like 81 quarter or something like that. So can't actually see my scale there. Yeah, so somewhere a bit higher there. So not sure if I'll put that level there or not, because now this is becoming quite the wide range. So I might, right, think about it like it's stacked references, right? Here, here, here. So, really, we might treat it like that, but that's really wide, right? That's 74 to 82. So, 8 handles. I am going to keep the ledge in the back of my mind because it is the most minor reference. And they are stacked references, aren't they? And a lot of times, what's my advice on stacked references? Look to where the furthest ones are from price, right? Where we might run, to the most difficult to reach. And I am going to keep in the back of my mind that actual literal monthly developing value high right now is around 3371. Okay. And I'm going to note that overnight rejection, the overnight low there was precisely to that, which was a wick through composite weekly, right? So we got a nice area here to watch in the S&P, and I think I feel pretty good about this. This doesn't need to be bullish anymore, so we'll change it to neutral. This is just the other side of the weekly. Any important structure below, it's not till there, so we're good there. So you see how I'm just kind of double checking myself as I look at the prep here. because I'm, it's not only important to my trading, it's important to other people and stuff. So I really do want to give it a double check and make sure there's nothing missed, that everything makes sense. So yeah, so for me with S&P today, I think we got a pretty good level here. I think there is a little bit of, it's a little more wiggly than we might like, right? It essentially runs from, currently 71, but as I mentioned, that monthly developing value is going to be stepping up, and it's going to be really nicely confluent maybe by the time we start potentially trading from this area. And then that ledge from yesterday is something I want to keep a little bit of an eye on. But other than that, here's our zone, right? It's mid 70s. Let me take a screenshot and make the post. So give me just a second to focus and type there, and I'll be back with you. All right, so buyers remain in control of the tape as we begin, it would make sense that we see some kind of pullback here, right? Unless it's just going to somehow stay fast trend with no sellers behind it. Maybe we should say thank you to rollover. I don't know. I don't know about that. So yeah, right now it's pretty clear bearish 4280s. So if we get some kind of a pullback, I'd probably take that and begin to write off order flow as rollover wonky. You got a lot of people, maybe some synthetic order flow as they roll positions into the new contract. I don't know. Maybe there's better ways to think about that and analyze that. But anyways, it's funny. Footprint chart, it's these elongated 16 tick down bars, and you've got this like 300, 400, 500 positive delta on each bar. It's pretty wild. What I'm hoping doesn't happen is that we revert to, all these multiple time frame prior or current big, we're in the meat of it here, right? Like point of control, VPOC type area. So hopefully it doesn't get too choppy on us. To me, it's looking like ES is actually a better candidate for a quality trading vehicle today than crude might be. A lot of times I'll think, well, maybe I should have done this or that with my prep levels, and what just went through my head there was, man, that that ledge might have deserved a line on the chart, but I would stick with my guns on stacked references and keeping the lines in the sand, the more important higher time frame references. opening up in the SPOOs. Nice buying coming in right from VWAP. I would much rather see this buying fizzle out here, though, and drift lower and leave this nice little baby right here for us. Incomplete auction at this high, incomplete auction at this high, right? So this area needs to be cleaned up, so it's going to help the market get there. So if maybe, just maybe, we can not get there right now and come back into maybe a, fade a lower extreme here intraday and get our trade location. That damn ledge, though, that might be where we drive from here and just go. So anyways, thought that might be an interesting thought for you there on shorter term incompletions or essentially auction market theory, lack of excess, sweetening the deal for trades. So it might just be too sweet, though. Is trying to get there now. Continue to monitor crude for the pullback towards 42.80. I will BRB. All right, I am back. Crude slowly working its way uh, higher, bearish, but seeing what kind of pullback we can get to unfold here. So, an alternative scenario that I don't believe I've mentioned with the S&P is okay. That pre-market low from yesterday's ledge, wicked VWAP. That's all she wrote. That's going to be the low for the next 6 months. You know what I mean? Like it could be. So, if that's going to be the case, as we now see stop runs through those juicy areas I was talking about. I still think this is not secure either. Um, we can get on board with that, right? We just didn't get that ideal, very best, fantastic risk reward trade location. That doesn't mean that we won't have anything, right? So we go and balanced up. Buyers are strong, sellers are weak. We'll go with imbalanced pullbacks. Again, similar to yesterday, in terms of a lesson with that group and things like that, and something maybe that you guys pick up on that I'm doing here is I'm thinking ahead, right? I'm thinking of essentially hypos, and really specifically, I'm thinking of not like staring at the chart, thinking like maybe I should buy or sell here. Maybe I should buy or sell here. No, I'm staring at the chart and I'm thinking what would unfold to be even begin me shifting modes, really shifting from I'm just observing, I'm just looking at what's unfolding, blah blah blah, to shift to stalk an entry mode, right? And I haven't been in stalk an entry mode. The closest that I would have been to that all day today is, as we've been talking about, let's see what the up leg in crude here looks like. So as that becomes more and more of a bona fide, you know, counter move, right? An up leg within what's now considered kind of a downward momentum to this market, we'll consider, you know, entering into stalking mode. So that's important. Don't, yeah, a lot of traders, as soon as the opening bell rings or whatever, they're in stalk trade mode 24/7, and that's a problem. You need to be able to shift between those modes, and know, based on your process, based on how you have clear sets of identified, defined opportunities, when to enter that mode and when to begin to really lean heavily on the order flow and really stare at some lower time frames and really care about a little blip here or there in price, right? Sometimes we really care. Most of the time we shouldn't, and we don't. Now, one consideration that we'll have in crude here is, do we take the ETH imbalance pullback down despite the fact that we'd prefer to see some type of structural return pullback, right? That's probably going to be uh, one of the next major decisions that we have to make if the market presents, you know, a momentum shift there and stuff like that. So kind of entering potential stock mode in crude here. So ETH development value low is confluent with RTH VWAP. RTH delta is hitting one of, uh, a minor level at 2,500 here.
It did hold off the composite point of control. Does that mean anything to you, generally speaking?
That's mostly expected behavior, right? If I were to model out classic movement, right, and you attempted a break or whatever, and then you're getting some kind of failure and reversion. I guess typically, let's say the point of control is here. Typically, you might see some type of pullback here, and then the reversion to the point of control, and then a response there, and then maybe phase three or something is kind of destination. Obviously, it's not that simple, right? And today, what we got is so far was something where it's a straight reversion here. So that brings us again to that quandary that I was putting in front of us a second ago, which is, can we get this? Or am I going to take something like this? It's always uncomfortable when an area hasn't been firmed up after a condition shift. If you ever take a trade where that's not happened, it should make you a little uncomfortable. But looks like we're getting closer and closer. But what's the downside of that? It's tough to see on, this is a 5-minute chart, so it's very slow moving compared to a lot of information we're taking in. But obviously we're almost to the point five by the time this trade might be setting up. So really, in terms of DVA trade location, the only thing that we could point to say, okay, this makes sense, you could do it, is what?
The RTH GVA
Yep.
high?
That's right. That's right. Not going to forget about prior day structure. So in fact, like I think we could really make a split here and try and dial in a better value area. In fact, what I think I'll do is split starting in C period where the balance began. So there you go. That's pretty good. So I'm actually going to just highlight that on my chart. Doesn't hurt to do stuff like that, I want to keep that in mind as we kind of see, again, multiple time frames. Probably one of the best things that I do as a trader is keep in mind the auction process across multiple time frames and then rank and distill that information to make quality decisions. With processes in place to apply tactics and do all the other things that we do. and handle dissonance. What you do in S&P? Well, there you go. It took out, the first area there. It took this out, and then saw, kind of on a short-term like footprint basis, like snap back in terms of once that was accomplished. So our worst fears came true in the S&P. Uh-oh. There we go. I'm liking the short opportunity in crude. It's a classic failure to sustain a break from balance. We're getting a retest into the area. Order flow is essentially written off at this point for me. So we are in stock short mode for crude. This is essentially a faux. And there's been a decent amount of tempo, from buyers into this area. So I could have pulled the trigger there as it started to shift lower, right? And I'm not going to do that. I am going to be more conservative. Again, faux. So I'll probably look for something more of a initial move and then something to fade to then hopefully get what I want, right? Rather than just taking the first. And that's what separates a lot of would-be good NADRO traders, I think, is everybody thinks that you could just always trade the first short-term momentum shift, and that's just always as good as it gets. And sometimes it is, but a lot of times markets take more complex pullbacks to work out before they actually shift on what you and I refer to as a medium-term basis. And just getting that screen time, it's a very difficult thing to acquire, of just knowing where it makes sense for you to say, you know what, that's a normal beginner level entry there that I'm going to pass on. And that could be based on faux, order flow, rhythm, whatever the concern may be, stacked references that haven't been run through, the way something is on a footprint, the lack of a tempo or tempo against you. All those things can go into to play in terms of, I'm not going to get short on this, Heikin-Ashi shift here or micro trendline break or whatever it is. There's always a gamble in doing so, and that you miss the opportunity. So it's ETH VWAP plus an RTH upper extreme. It's into our key area. It's time to be putting short risk on. And the things that I've been discussing the past couple minutes is simply, what kind of tactics am I pulling out of the bag? What kind of shorter term things am I using to pull the trigger or not? ES is probably going to settle into a grind up mode, and we won't have a trade in it all day, probably. We'll see. Just about the strongest selling we've seen all day in crude there. So here's where the FOMO sets in. Oh, we should have taken the direct trendline break. Come on, man. Relax.
Isn't that angle a little steep for a trend line break? I'm just asking. I'm sorry. I'm not trying to impose anything, obviously.
No, dude, you could never say any question thing like that to me that would be offensive. No, it's. I mean, I part of the reason why I'm not short right now is because of that steepness. So you're correct. My point was, if we had have drawn, some kind of like trend line break and whatnot there, we would have been in. And my point just then was more of like a psychology tip, in a way of saying, oh, now is where we could be experiencing FOMO because we didn't get in on a trend line break. But your point is valid, as I alluded to, with the tempo and the speed of the move into that. I'm personally, like I drew, right? What did I draw? Steep move into the area. I want to see some kind of selling response, which we now have. And now I'm going to look for something weak to fade. Make sense? Or are we talking about different
100%.
things? Okay.
No, we're talking about the same exact thing.
Perfect. Could be 20 minutes before the crude short that I'm stalking in the way that I'm requiring it to sets up. Okay. S&P with some strong selling. Very strong selling. That could actually be like a minor, headline or something, which is probably gonna, if that's the case, would drag crude with us, and we, we'll be left in the dust there. I don't see any global macro headlines. I do see an interesting headline that says S&P hits all-time record high. So that is obviously on a non-back adjusted basis, which is not a chart that I have in front of me. All right. Crude. Drifting back up. Stalk mode engaged. Incomplete, 38 by 20, so just sitting. I'm happy for this to be a pretty short, pretty micro type pullback here. But if it doesn't go any higher than 79 cents, which is kind of the high right now, then I'll let it go. So it needs to be more than what we've seen now, but won't need to be a whole lot really. Not nothing scary about anything on the tape. In fact, it's in our favor on this drift higher. Low tempo here, not much happening. Tempting to turn, but no conviction, by the sellers. Nothing. Might be seeing more. All right, I'm short. Just waited for just to hang on and see if sellers could press a little and stuff like that. Has been kind of a slow tempo, drifty area here. So odds are not super, super high on this working. At least immediately, right? Without, a little wick higher and more kind of like the market figuring out what it wants to do in this area. But everything that's most important for us has already been taken care of. It's just short term, doing our best to time the entry in a quality way, the best of our ability, and that's all we can do. Check out the S&P real quick. Okay, S&P right to that ledge. Neutral on RTH. Poor low. But back to the risk we have on. Okay. I'm reading the tape here since this overall sequence of the micro move higher as maybe a little bit, just a tiny bit of absorption, actually. So maybe a little bit of a passive seller in the area, but nothing major. Probably going to stop out of this. I'm going to give it just a little room. I knew it needed to go a couple ticks higher right here. But if the volume stays super light, then I'm just going to keep giving it a little room. But if we start going heavy, going incomplete, stuff like that, then I'm gone. All right. I am out. Over to the S&P. So immediately on the price action, we see, almost like a micro poor high, micro poor low type deal. It's literally a poor low here, but the footprint's incomplete there, as I figured it would be based on those 3 volume bars being at the exact same price level. Continue to monitor crude here for reentry. So this is going to be a very hectic period of time right here. Don't you love it? All right, got back into the crude short. Aggressive.
Was
Yeah.
that a TPO footprint chart call? I haven't had anything on my screen that would trigger it. So I figured I'd ask.
It is a micro trend line break.
From where?
Huh?
I'm sorry. I was talking to myself.
Did you say
I said,
from where?
yeah.
Here.
Oh, interesting. Okay.
So hopefully we see a little more drive lower. This looks like a compression into the low in the S&P. Crude's working. Don't need to do anything at this second. But what I would like to see is for crude to give us some excess into this trade location area. Ooh, I should take a little first scale. I kind of missed what would have been a good first scale into like 69, 70, 71. That was my fault.
You're funny. I actually added. I was going to ask you about that. Once you saw the speed pickup, so you were actually scaling into that.
Scaling out.
Yeah, I assume scaling.
I didn't yet, but that's what I'm looking to do. So it's a return pullback, right? Our trade location on ETH is against return pullback type stuff.
Right.
And so ETH developing value low, RTH VWAP, I'm looking to scale. It's a decent rotation. Okay, so I got scaled here. A little more there. Okay. Back to the S&P. Okay, so quite a bit of selling. Neutral didn't hold. The compression blew through. Quite a big move. Let's go. I don't know what's driving things lower here or anything, but doesn't really matter. A lot of what I mean is a lot of times if you see like S&P really starts selling off sharply or something. I mean, look at the delta on this 5-minute candle. It can drag other things with it, so that could be good for our crude position. I was getting ready to stalk long ES, right? I wanted to see some excess put in at the low, and essentially the same pattern that we used for crude, excess and then something weak, right? To take us along from this area. So probably not going to set up at this point.
Would you need the RTH to go and balance down to take an ETH and balance down in crude? Or not necessarily?
I don't think so. I don't believe so. No.
How many units do you have? I don't care. I'm not saying your size, but like how many scales would you? Because that was a pretty tight one. Like if you're only trading 2 lots, would that be kind of tight? Let's put it that way. If you were only trading
Would
2
that
lots,
be
would that
quick?
scale be tight? Yeah.
That's what you mean by tight?
Yeah.
I don't think it's a good idea to consider. Well, it's tough. In general, I would say try and avoid questioning when market generated information or rationale behind this trade's a little compromised or whatever. Don't use that stuff. Don't allow some thought that creeps into your head like, well, really, I should be scaling, a minimum of 20 cents, or that's, I don't like to scale before that, or this seems a little quick or something like that. Like if that question that if you do feel it and say, okay, is that a rhythm based thing? What's going on here? For me, it was classic, right? It was that we had stacked incomplete auctions into the kind of the 70 cent area there. We went through it, and I said, oh, probably should have gotten a scale there. And then I waited, and then what's week 3 of teaching NADRO in trade management? Where do we scale? Well, guess what? The other side of DVA into VWAP, that type stuff. It was a decent rotation based on a couple small rotations we'd been seeing. Like if you take this out of crude today and this out, well, then what are all these little small rotations? What's their size, right? It's this. So taking one of these into here was perfect.
Got it.
What did I think about the buying here, guys? What were my thoughts on right now crude kind of turning and the buyers showing up? What are my thoughts? You tell me.
I would say kind of weak.
Yeah.
What?
Kind of weak.
Oh, like on the tape in terms of the buying so far?
Yeah.
That's true, but I meant like more generally. It's kind of a trick question.
You saw a little bit of absorption coming in.
No. Sorry to cut you off. The answer, guys, is I don't really care. And I think that's very important. I think you get scaled, you do your job, you apply those short-term tactics, you get into a position the best you can, and then you let go. And so you guys, your responses to that question were honed in on the order flow and okay, is there a little bit of absorption here or there? What's going on? No. We need to move to more of the section of our process documents where we need to think more about core position trade management. We need to revert from the micro back out to the macro and think about narrative and what's the potential for this trade, right? The hard part's over. It's really important.
If we did these once a week, we would be freaking golden. This is really helpful. Thank you.
Awesome, man.
Let's just say your cadence to your approach is a little bit different than my tempo. Given trading day.
Tell me about it. I got
seconded.
I'm just more. I wouldn't have been so relaxed. I would have been way more high strung.
Well, there's some mental framework growth opportunity.
Yeah.
It's a bunch of freaking random squiggly lines movement, guys. Anything in the world can happen at any time. I know the NADRO framework is pretty great, but nobody has secrets to what's going to happen next. We just apply these frameworks the best we can. We understand kind of some general things, and we do our best. And it's just, you got to know what you can control and what you can't. And the more you're really strong in that belief and embrace that uncertainty, I think the less high strung you are. All right, so S&P, is this an opportunity? We're in balance down. It's a breakout pullback of prior value. It's a return pullback of CVA. The problem is it doesn't look good at all in terms of, notice the quarterly has now drifted up into this confluent zone, right? This is an imbalance pullback for the quarter. This is a breakout pullback again with what looks to be a wick forming so far on the weekly prior value. So
And Delta just neutralized too, right?
that's right. Muted response, we should note, though, however, from buyers as we drift higher, right? So one bullish factor for the tape, one bearish factor for the tape.
And the RTH Delta is way below neutral. Well, not way below neutral, but it's relative to
Sure,
ETH.
sure. It's below 2,500. We're coming into minus 2,500 on the retest. Yes.
Yeah.
So, short term, I lean bearish here, right? We have clearly violated recent structure in terms of yesterday's balance. Let's check on crude. We have made it halfway across the CVA and are pulling back. So to me, the what I'm most keyed in on is bearish. The dissonance is on essentially the long-term VWAP narrative, right? There's where the dissonance is. But I'm leaning towards going with this breakdown on the S&P.
Do you give any consideration, because it was a failed break higher, the strength of this short? So yesterday's consolidation. I mean, you can see it pretty clearly on the RTH, an attempt to go higher, and then it blitzed.
Yeah, it's I think it would be good for you to like put that into simpler, more basic NADRO teaching by phrasing that and thinking about that, like what's the strength of the narrative and part of the recency. There you go. So you already knew. Boom. So absolutely, the narrative is better because of that recent shift. You got it. Kind of weird. I do find myself like wanting to change the scale is whenever I look at this chart because of just how different the bullishness is from here versus the bearishness from here. It's like being in this what could be seen as a single area, right? Which is the way I phrased it on the pre-market type talk. But the problem is essentially higher time frame rhythms are creating a difference. This is one of the most complex things you'll ever hear me say. The higher time frame rhythms and general size of the overall areas, that is the full CVA, that is the full, prior value of last week. Sorry, I'm stuttering. Have created different acceptance views based on this down move back into what I was hoping to think of as one area, but it's not seeming that way to me in real time. What it seems like to me is that CVA is now a bear line in the sand, and weekly prior value is still a bull line in the sand. So to me, rather than this being a great trade location to just look at basic acceptance to the area, to me, it's this doesn't happen often. It's looking like more of a all right, I did short some S&P here. It's looking like more of a dissonant zone. and I'm choosing to go with the shorter term. I'm choosing to go with the weak order flow. I'm choosing to go with the distribution narrative over the long-term view app. So because I do have very manually done positions in multiple markets, what I'll do here is always visible. I'll put it here, and then I'll go to crude oil. And here's my S&P chart from that chart book. So now we can keep an eye on both. We can flip around, manage things quickly where we need to. Crude coming into another area here where with no selling, by the way, so I'm going to be aggressive on this, where, all right, I gotta pick up my brain speed here. I got a lot going on. Where it's a scale out point, right, into the other side of RTH DVA and whatnot. So I'm going to stalk that scale. S&P, I am taking a little off here. I know it's quick, but I am taking a little off just because of that dissonant picture on the weekly. This is an intermediate scale. This is very important in crude, guys. I'm stalking an intermediate scale. This is if you're trading more than 2 lots, this is where you think about some of those middle scales. And if you watch the video from yesterday with the other group, I laid down a long string of thoughts around middle scales because someone said about how much nicer that is to be able to do that. Let's try. So continuing with that thought with crude oil, with this only being an intermediate area to scale. In fact, this is really good rhythm here. I'm just going to piece out of a little bit of this. Okay. Yeah. Let's continue the conversation with the real core, right? And that's going to be the full other side of the CVA. That's confluent with the full other side of last week's value and volume distribution and whatnot. Hop back over to the S&P. Beautiful rotation. I'm going to finish out a little bit of the scale. Okay. So that's like a full scale out for me there because that's a nice rhythm. That's a nice rotation. And it's pretty much the same trade in these markets. They're both structural, mean reverting type trades, and we're seeing now if we can get the other side of structure. I am now in a kick the chair back board position after having just gone through more intense than normal. Like, quite frankly, it felt hectic to me just because I'm having to narrate and I'm having to do all this and try and like think about my thinking and explain it. So I feel like I need a break now. Any questions? Because now I can
Yep.
kick back more.
Perfect timing. So this is a question I have. So we're the core's on, right? We're seeing the trade move in our favor. It did a normal scale based off of some of the previous rhythm. However, it was a quasi-compromised entry just based on the fact that you didn't have perfect alignment between ETH, that's specific to CL, ETH and RTH.
Right.
However, you're moving into a scenario where that picture with let's call another 80, 90 cents to the, another 90 cents, 60, 70 cents to the downside could be possible. Would you consider adding on if there was a rotation that came back into play? Or would you just say, hey, I've taken my scale on this trade?
Let's keep in mind the tape sucks for the short.
It does.
Okay. So that's been a problem all day. So that is a strike against an ad. Another strike against an ad is the same thing I was talking about earlier, which is this is a mean reversion play. I prefer to have ads where I have imbalanced plays. Imbalanced plays by nature are cleaner and move further. So it warrants extra risk where I can press it. I'm not a big adder in general, Paul.
I didn't know that. Okay.
Yeah, it's not something that I do a lot. Probably a couple times a month.
I'm going to listen to this a few times.
I'm gonna tattoo that on my clicking hand.
Stop
But the
adding.
hand tattoo's in, right? So we could do that.
I'm
Or
going
the interior lip tattoo.
Yeah, I remember those. It's gross. No offense to anyone that has one, of course.
Sure.
Matt specifically.
Talking to you, Tim. Tom.
It was really helpful, actually, like this whole thought process around keying in on the CVA and the weekly and not letting that monthly deter you. I mean, it's there, you realize it, but
The weekly was dissonant as well.
yeah.
It was structural versus long-term VWAP, essentially.
Right.
Granted, I think the quarterly's in my favor, right? But that's not a big immediate.
I think that pattern shift is a pretty big deal on the quarterly.
I'll say the same thing I said this morning, which was it's kind of a pattern shift, but it's also kind of what was happening was unsustainable, and we are settling into more of a maybe a 1.5 to 2 type rotations, right? Rather than just full on bear pattern shift. Obviously, full on bear pattern shift is beneficial to me in this moment, but that I'm not gonna get on the hopium with that.
The saucer's eyes dialed in a little bit.
Yeah.
If you don't mind me asking, I noticed that maybe I missed it in the NADRO course, but it seems like the RTH consideration is a larger part of the process than I would have originally anticipated. Is that evolutionary in nature, or is that just given the backdrop?
Very smart little addition there. When I did the NADRO course, I was barely using the RTH, and shortly after I finished the course, I took RTH off my charts entirely.
I remember.
It's only been, I think, in the past couple weeks that I've put RTH back on and am using it actively. So, it's an evolution is exactly hitting the nail on the head there. What a gift, of some movement here. And
yeah, the VIX is spiking big time.
Yeah.
Do you find that VIX leads at all? Sorry, Merritt, do you use the VIX at all as a
No,
in any capacity?
no,
Okay.
I'm an idiot.
I'm not sure I agree with that.
I'm a simple guy. All you VIXologists out there. term structures. Get out of here.
I was
out
listening.
of
Yeah,
here.
sorry. Yeah, well,
What?
we'll leave this for a conversation another day. Oh my gosh, it hit my scale and I didn't get filled.
Oh. Well, it's tough, getting that, -2 on ETH and RTH, asking for much more than that. You know what I mean? Like, really, if you got anything, on once it began to get to that point around, 69 or so, that was as good as you could ask for. Really starting to ask for more if you were trying to get whatever that low tick is, I think. Guys, I really hate it, but I'm a minute late for another meeting. And so we gotta shut her down here. The important point, the important part is done. Right now, it's, can I get destinations or not? Can the imbalance that's showing up, especially in the S&P, if for me, it's that medium kind of shift from, well, not a shift in this case, but the imbalance needs to hold in the S&P for me to remain in this trade. So its imbalance fails, gets me out. Target area gets me out. Crude is a little trickier because I would still define crude as rotational on ETH and RTH. So, but we do have what's, forming as kind of a B, C, D ledge here. So if we break through that, hopefully there's enough energy to run across the distribution, and just, what's that going to look like, right? It's going to be like just a real extreme if we have the energy be just beyond the twos. It's going to be asking for a lot to happen in a single rotation. But anyways.
You're going to keep a resting order at your at the destination or not?
In crude, I probably am. In S&P, I'm more interested in what can potentially unfold more. So it'll be discretionary. And the reason is essentially the quarterly on both timeframes here. So S&P with a lot longer way to fall, right? Oops, wrong chart. Here. That's where we could go on that time frame. Whereas on crude, we're running into quarterly just below, just into the target area. Make sense?
Yes.
Okay. So that's why I'm going to manage those differently. Guys, awesome. I gotta step off. I'm late here, but we'll talk more about this. We have a session later today. Okay. So cheers.
Thank you.
Thank you.